On today's episode, we're going to deep dive on the SBA Community Advantage Program and when you might want to utilize this program and how we go about finding the right lender that will actually do this program. Generally, these are from smaller loans from $50,000 to $350,000. And we're going to dive into the qualifying process, such as the SPSS Credit Scoring system that was created by FICO, specific for these SBA type of loans. So stay tuned and let's begin. All right, so we are here. We're going to talk about the SBA Community Advantage Program, and you guys can always book a call with me at bookwithbo.com. And let's get started. So what is the Community Advantage Program? The Community Advantage Program offers loans as small as $10,000 up to $350,000. Generally, you don't see that many small loans, but there are some institutions that will make those micro loans. All these loans are going to be tied to the Wall Street Journal Prime plus a margin. The loan terms are going to be anywhere from 6 to 10 years. With real estate, they could be amortized as high as 25 years. These are variable rate loans the majority of the time. And like I said before, based on Wall Street Journal Prime, today prime rate is at 8.5%. Just about 2.5 years ago, it was half of what it's at today. So rates have really gone up. And SBA 7A loans are derived from Wall Street Journal Prime. Just keep that in mind. You know, the key benefits, these are available for startups or existing businesses. Either way, for franchise startups, a good portion of the loan is guaranteed. So that's why these lenders like to make these loans. Usually these community advantage programs are offered by nonprofits that work exclusively with the SBA. And really it's providing capital to borrowers that they wouldn't be able to get the capital anywhere else, pretty much, because it could be pretty high leverage, up to 90% loan to cost. So that's pretty darn good. And the reason they're able to do this is because the backstop is the federal government with the guarantee. You can use these funds for many things. So working capital, operating expenses, tenant improvements, equipment, business acquisition, refinancing eligible business debt. Most of the centers we work with, the lenders, they also have a counseling division. They'll help you put together business plans. Of course, our team can definitely give you guidance there as well. Remember, you can reach out to bookwithbo.com if you're interested in financing, whether it's the Community Advantage Program, Small 7A, Express, or the 504, or any of our government guaranteed products such as USDA, BNI, and more. So what are the requirements for the Community Advantage Program? Acceptable credit history. There actually is no set credit score requirements. Later in the slide, we're going to talk about the SPSS Credit Score system and model. You need 10% down, and a rule of thumb is they want to see 10% post-close liquidity. So if you are doing your total project cost was $100,000, you're going to need $10,000 for the down payment, or we call it the equity injection, and then they're going to want to see another $10,000 in your bank. And that's not set in stone, but that's just a general rule of thumb. They're going to want to see sufficient cash flow, but they will work off projections for startups and franchise startups. And sometimes on the projection-based loans, the margins are a little bit higher, so your rate's going to be a little bit higher because they're not basing the loan off historicals. They're basing it off projections, and those loans tend to have a higher failure rate. You know, the Community Advantage Program is really out there to help low to moderate income communities. It really can help most people, but that's kind of their focus. Now let's dive into the SBSS credit score. Most of these community advantage lenders are going to want to see a SBSS credit score of 155. Usually they're going to pull this score when you submit an application. You would have your DBA or your business entity set up at that time. Then they're going to run that scoring model because they need that entity to run the scoring model. And let's kind of dive into what is the SPSS. It is the Small Business Scoring Service. It's a credit scoring model specifically designed to assess the creditworthiness of small businesses. Developed by FICO, the SPSS score is a composite score that combines both the business owner's personal credit history and the business's financial health. This model helps lenders make informed decisions about extending credit to small businesses by providing a standardized and objective measure of risk. Here are some key features of the SPSS credit score. The SPSS score ranges from 0 to 300, with higher scores indicating lower credit risk. The score integrates various factors, including the personal credit scores of business owners, the business credit profile, financial data, and sometimes industry and business size. And keep in mind, even for a startup, they're going to want that DBA or that business entity so they can run this scoring model. How lenders use the SBSS score for SBA underwriting. The score is a critical component in the underwriting process for SBA loans. The SBA uses this score to streamline the evaluation of loan applications, ensuring consistency and efficiency. The SBA sets a minimum score threshold that applicants must meet or exceed for loan consideration. This threshold can vary depending on the loan program, but typically a score of 135, 140 or a better is required for a standard SBA 7A loan, while higher scores may be necessary for other loan types. Lenders use the SBSS score to quickly assess the risk associated with lending to a particular business. A higher score suggests that the business is more likely to repay the loan, making it less risky. While the score is a crucial factor, it's not the sole determining factor for underwriting. Lenders also consider other aspects such as business plan, collateral, cash flow, and overall financial health of the business. The SPSS score helps streamline the initial screening, allowing lenders to focus on applicants who meet the basic credit worthiness. By utilizing this scoring system, lenders can expedite the loan approval process. The standardized scoring system reduces the time and effort required to evaluate each application, enabling lenders to process more loans and provide faster response to applicants. Understanding this SPSS credit scoring system and its role in SBA underwriting can significantly enhance your ability to navigate the loan application process. By maintaining a strong personal and business credit profile, you can improve your SPSS score and increase your chances of securing funding for your business needs. So let me kind of unpack this a little bit, because essentially most of the small loans, and when I'm saying small, that's sub 500 now, the small S7A and the Express can go, are all probably considered up to 500,000, although many still do the Express program up to 350. But on these systems, they're usually all scored by either SPSS or some other similar credit scoring model. But any of the bigger loans, they don't really put emphasis on the SPSS score. It's really the sub 500,000, really the 100 to 350,000. The smaller loans are going through this express process, I will call it, because we have some banks, for example, on our franchise startups that we're closing deals in 2 to 3 weeks, and it's because they use a credit scoring model. So once we do our initial diligence on the file, we complete an application, we send it in for credit scoring. If it scores, it goes in right into processing and data collection, right into underwriting once we get all the data. It's a very fast process. The SBA really is pushing for lenders to do more small loans, because most lenders have minimum thresholds of 250. There are out there that will do 150 and greater, but very few lenders are doing the micro and small deals, sub 150. There's definitely a handful of banks that we work with that do them, but it's not, there's a certain appetite. There's really a certain appetite for different, I'm going to call them food groups. So a franchise startup versus an established business acquisition. A business acquisition with no collateral, which we call an airball. It's a $5 million deal. The buyer doesn't have any additional collateral. That's a giant airball, right? And so some banks will make loans like that, some won't. So even though the SBA sets out the SOP with the general guidelines, every lending institution, and remember, there's banks, there's non-banks, and then there's credit unions, regional banks, and there's PLP. And the PLP are the lenders that actually underwrite these 7A loans and these express loans in-house, and the Community Advantage Program as well. So most of this Community Advantage Program is not being offered by banks. It's usually these, I'm going to call them like nonprofit groups that work in conjunction with SBA. Those are the ones that are doing the Community Advantage Program. Although there's no set credit score requirement in order to score on SPSS Credit Score, they're going to take in your personal credit. So your score's got to be relatively decent. I think, when all factors come in, you're still going to have to score. So this one particular lender, for example, they need a 155 SPSS credit score to move forward. So just be aware that's really like on these smaller deals, you're going to be based on this FICO algorithm for these SBA loans under 500,000. Each of these nonprofits has a primary footprint. This one in particular that offers the Community Advantage Program they're based in California. They'll do, they're doing a majority of the deals in California, Arizona, Nevada, but they'll do nationwide and in metro areas. They'll really do any deal that fits the guidelines. We work with several groups. These are just specific to this particular group that offers the Community Advantage Program. Some of the next steps, if you're interested in starting a business, buying an existing business, or maybe you own a business and you want to buy a building, what I do is I help navigate the process. I know which lenders to go to. I know how to structure deals, get you to the finish line. So whether you want to look at franchise startups or you want to do an existing business acquisition that's not a franchise or business expansion financing, just simply go to bookwithbo.com. and we'll meet on Zoom and we'll discuss your wants and needs, whether that's you're just getting started and you need to push in the right direction. And you might even be looking at different sectors and businesses, like what would make the most sense. We do also have a team that helps individuals find their ideal business. We have a whole program where we use something similar to like a disc profile, but it's really geared for helping find an ideal business. It takes in a bunch of different components. It's about a 10-minute time frame to complete. So we like to start people there if they're looking for our help in finding their ideal business match. Anyways, bookwithbo.com. Follow this channel if you're not already. We have playlists on SBA, 504 Green, 504, 7A. How to structure deals that are greater than $5 million, USDA, B&I loans. We also talk about placing bank debt, whether it's for multifamily or hospitality. We cover the gamut here. We also talk about different franchise models, how people are structuring business acquisitions, and so much more. In addition, you can go to our new community, and I'll put a link below. It's the Business Ownership Academy, and we're hosting that on School, which is a platform for sharing content and events, and it's got calendars and all that good stuff. So if you want to get plugged in, you can go check us out. I'll put a link below, but it's Business Ownership Academy. Actually, if you go to businessownershipacademy.com, it's not forwarded yet, but that will take you right to the page so you can see what the academy is all about, the group. And I would recommend participating if you're interested in buying a business this year. Get your feet wet. We answer all your SBA questions. We have different panelists and experts come in, teaching on business acquisition, structuring financing, really everything you need to know to find and fund your next adventure or your next journey or your next chapter, whether you want to keep the W-2 job and you're looking to add a business to your portfolio, or maybe you're a serial entrepreneur. That's going to be the group for you. As always, thanks for watching, and we'll see you on the next episode. Hi guys, Bo Exian here. If you want to visit myterritorycheck.com to find out if the franchise we spoke about on the show, or maybe it's one you've investigated and you're trying to see if it's available in your market, you simply go to myterritorycheck.com and we'll do a quick search for you. You enter in your name, email, zip code, and we'll get back to you as soon as possible if that particular franchise is available. We'll also send other franchises similar to that if it's not available, so you can figure out what is available in your marketplace as you're diving into different franchise models. So go to myterritorycheck.com and we'll help you out as quickly as possible. See you soon. Hey guys, Bo Exian here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide Great content.